Welcome to Lesson 7, and today's topic is covered in Chapter 11, which presents a discussion of proprietorships, partnerships, and corporations. We begin with a description of each of these three forms of business organization. Of course, our main focus will be on the corporation. Key to the formation of a corporation are the articles of incorporation and the corporate charter. These are public documents that are issued by the states to establish the legal existence of the corporation. All corporations are indeed chartered by one state, and typically we would here in California be dealing with corporate chartered businesses if they're locally based. Only a few laws regulate the operations of proprietorships and partnerships. There is a lot of course case law that is established, but for the actual regulations from Congress and state government, they're relatively limited. Corporations, on the other hand, are heavily regulated. Ownership in a corporation is evidenced by stock certificates, which we call shares. That means a share in the ownership of the assets of the corporation and a share in the profits, should they be forthcoming. A closely held corporation is one for which stock trading is done between individuals only. A publicly held corporation has its shares for sale to the general public through stockbrokers who are members of an exchange, for example, the New York Exchange, or the American Stock Exchange, or the over-the-counter exchange known as the OTC. Excuse me. Extensive regulation of stocks began after the stock market crash of 1929 and during the subsequent Great Depression. Government became actively involved in trying to eliminate fraud and waste and basically to prevent a future great crash like the one that occurred in the 1930s. They were somewhat successful. If you look at the chart of fluctuations in the stock market, they have greatly damped down since then. But we, of course, are not immune to those forces because we tend to forget the lessons of history and therefore become doomed to repeat them, as Carlos Santillana said. Extensive regulation of stocks has most recently followed the dot-com crash at the turn of the century, this brought about further regulation in the form of the Sarbanes-Oxley Act of 2001. There hasn't been any major legislation from the second depression of 2008, or the large stock market crash that occurred then, although there were a number of minor laws passed. Well, one drawback to corporate business is the double taxation of income. Corporate income is taxed when earned, and then the dividends from that income are taxed from the individual stockholders when they are paid out. The Chapter S corporation was invented to ease this situation for the owner by taxing the individual at the individual rate and only the one time. Of course, an S corporation is formed by only one person. Typically, that would be a professional like an attorney or a doctor or CPA or other professional, in order to protect themselves against lawsuits which are often brought against these individuals, which will sometimes claim their personal assets. The corporate barrier then allows the plaintiffs to sue only for the value of the corporation itself, and the private assets, the personal assets of the professional, are thus preserved. Any other type of corporation, typically the C corporation, is formed by at least 3 people and generally many, many more. Key advantages to the corporate business form are this limited liability that we talked about, consisting, continuity beyond the lives of the owners. Corporations can go on forever as long as they don't go bankrupt. Ease of transfer of ownership. Stocks can be readily sold and bought in the marketplace. And an advanced management structure, typically consisting of what we call C-level chief executive, chief operating, and chief financial officers. Lost track here. And in addition to advanced management structure, the ability to raise large amounts of capital. One of the drawbacks to proprietorship, of course, is limited capital. This is why partnerships were formed, so as to increase that amount of capital. But even there were limits, and very large projects could only be raised if the participants were guaranteed some protection of their own personal assets, which does not exist in the first two forms of organization. So thus the corporation is able to raise sometimes very large sums of money. One of the most highly capitalized businesses in the world is Apple Computer, worth nearly $1 trillion. To date, we don't have a $1 trillion corporation. The record is somewhere in the 800 billion range, but in due time, that record will be met and even surpassed. We next introduce the accounting methods for capital stock. The concepts include par value, stated value, and other valuation terminology. Stock itself is categorized as authorized stock, issued stock, outstanding stock, and treasury stock. And we'll take a look at the accounting methods for each of these. Typically, the only class of stock is common stock, but we can have and do issue preferred stock, which has a number of advantages and disadvantages with respect to common stock that we will explore. Included in this section are procedures for recording dividends, stock splits, which are dividends in the form of stock essentially, and appropriations of retained earnings. That company may set aside a portion of retained earnings or profits for specific purposes as stated in the appropriation. The price-earnings ratio is next discussed, along with price increases and decreases. This, of course, is the most visible feature of the stock market, that prices of stocks rise and fall in a somewhat cyclical fashion, although hardly predictable. The chapter closes with control of the business through a discussion of control through majority stock ownership. Anytime you own a majority of the shares of stock, or typically 51%, that would be an absolute majority, that gives control of the operation of the firm to the majority stockholder, and that is worth an addition to the actual stock value of the company itself. In other words, having control puts you in the driver's seat and is desirable, therefore is worth something extra. This, however, is not typically accounted for in the financial records. Next, we look at the 10K financial statements that are mentioned very briefly. In class, however, we will examine the financial statements of some selected firms and discuss the various sections of the 10K report and how it aids investors wishing to purchase a stock that will be a sound investment. 10K simply refers to the government accounting, the government description of the form that firms must, all corporations must fill out when filing their annual reports. For the last week, we will examine the statement of cash flows and the importance of that to running a business. And if time permits, we will discuss how to invest in stocks as a wealth building activity. Not specifically covered in accounting, but hopefully of interest to everybody that studies this subject. Would suggest to review your grade status by completing any unfinished assignments and or quizzes. I have just finished entering grades for everything to date, so you can get an up-to-date view of your status as of right now by checking on that, and then please inform me. I may or may not be able to reset some of the test options based on a variety of considerations. I'd be happy to explain them individually. Don't want to go into that in a group forum here of this sort. Do bring with you Lesson 7 outline, and note that the Chapter 11 exercises are going to be due before next Monday. So they're due essentially a week from yesterday. I want to get those in and take a look at that last chapter and recognize that once that chapter has closed a week after class, there will be no further adjustments available because I will have submitted your grades. Currently, everybody's doing quite well. I'm very pleased to see that. We do have some issues with a few of you, so I would ask that you please remain after class so that we can clear those up. Thank you very much. We'll see you in class today. Bye-bye.